Welcome to the Moore Realtors Weekly St. Louis Real Estate Market Update. I'm Dennis Norman, one of the brokers at Moore, and if you'll give me a few minutes of your time, I'll bring you up to date on what's happening in the St. Louis real estate market. Let's jump right in with some real estate news. Here are a few of the headlines from this past week from St. Louis's best local source of real estate news and information, stlouisrealestatenews.com. A report came out showing that foreclosure activity in St. Louis had increased in January from the month before, however, it was down significantly from the year before. Another report shows that new home construction activity in the U.S. is picking up, which coming off the record low year, and last year we hardly had any direction to go but up, but this is still good news. A mortgage interest rate update from a local St. Louis mortgage banker, as well as some survey results from a survey that was done that shows that Americans have not lost faith in the American dream, that 8 in 10 people still see home ownership as a good investment, which it is, and we'd be happy to show you why and the data to support that. And then an article talking about where the real estate market is headed in St. Louis this year, and this includes a forecast I did that has a lot of detailed information on the market, where we've been, where we're headed, and you can get that on stlouisrealestatenews.com. There's a little form to the left side there. Just submit your name and email address, and you'll get the report back immediately in a PDF, as well as a link to a video that I did on it. Or you can also go to our website at mo-re.com. Now let's jump right into some market data. The first few slides here are real-time market data, up to date as of now, and these are this data is based upon the entire St. Louis metropolitan area, which includes a few counties on the Illinois side. We can see here the median list price is $178,000. Median asking price per foot, $96 a foot. Average days on market, approaching 6.5 months, 192 days. Quite a few other stats here as well. I'm going to skip down to the market action index, which is 16. It's been 16 for a couple of weeks now. Before I go further, you can get a whole lot more data like this, and much more detailed data for any market in the St. Louis area. You can zoom this into a particular municipality, such as Wildwood, Chesterfield, Creve Coeur, or a zip code, and you can get a detailed report. You can sign up for free weekly updates that come out. Just visit mo-re.com. That's mo like Missouri-re like realestate.com. Back to this market action index, it's 16, and you can see when this market action index was introduced back in 2009, you can see where it's been for the St. Louis MSA. So recently here, I just skipped ahead a couple slides, sorry about that. Recently, over the past couple of months, you can see we've hit a high, at least from the standpoint of, or since inception of this. A quick reminder on the market action index. This looks at supply and demand in the market and applies an index to it. A 30 would be a perfectly balanced market, not favoring buyers or sellers. Above a 30, it's a hot market, favoring sellers, and the higher it goes, the hotter it is, up to a maximum of 60. Below 30, it's a cold market, favoring buyers, down to a low of 30. The lower it goes, the colder it is. So again, it's 17, dropping down to 16 here. Definitely a cold market, but a warmer market, or a better market than we've seen in the last 2.5 years. This is the same thing, the market action index. I broke it down into quartiles. I sliced the market into fourths based upon price range, and basically this is the price range is inverted. The lowest price range is on top, the highest on the bottom, and that's basically how they've performed since inception. Now we can see here recently, over the past few weeks, the 3 highest price ranges, are all but the 4th lowest price ranges have combined here pretty closely, but the lowest price range, the 25% lowest priced homes, that market has steadily been the strongest one in St. Louis area. Now let's go ahead to this is a look at the St. Louis metro area median price trend for the past year, and here the orange line is a 90-day average of what the median prices have been, and it shows the long-term trends. And we can see that while we had a peak back in the summer, we can see that things are headed back down. It just dropped to about the $176,000 mark, and is headed down, looks like, toward that 174 mark where it was a year ago. Now the black line is a 7-day average, so it's a little quicker to show a change in the market. And we can see here clearly it was pointing downward, but over the last few weeks it's been pointing upward. So my guess is going to be that we're going to actually see this trend. We're going to see the orange line level out and not dip back down to quite as low as it was a year ago. Now we're going to move into the core of the St. Louis market. We're going to look at the 5 counties that make up the bulk of the real estate activity, transaction activity on the Missouri, or in the Missouri part of the St. Louis metro area. So these slides are all based upon data combined from the city of St. Louis County, St. Charles County, Jefferson County, and Franklin County. And we can see here a slide that shows the number of sales and average sales price for this 5-county area. And we can see January was down fairly significantly in terms of number of sales, the blue column here, from December. December was up about 2,100 homes, and we can see January was down more in the range of about 1,600 homes. The green line represents average price, and we can see that while that was drifting around about the 150 mark or close to it, it fell down here below 140 in January, so downward trend there as well. This slide shows the median sales price, the actual prices the homes sold at, as well as the median number of days it took for the homes to sell. The yellow line sales prices, we can see what that's done over the past year as it's bounced around from the 110 up to 100, above about 130, and back down to about the 110 range. And we can see it took a pretty severe dip in January below 100,000. We had a lot of lower price sales in January. And we can see the days on market, the red line, it has been, it was way up almost 100 days a year ago, dipped down to a low of about 70, and now is back up in the 80-something day range. So again, this core area, if you look at the days on market, it's doing better than the overall metro area, but it still could be better. And now here is, I call this one my Realtor scorecard. This shows the ratio or the relationship of the price a home sold for versus what it was listed for. And then I look at that 2 ways: what it was listed for at the time of sales, so in other words after any adjustments, while the home was listed, and also the sales price as it relates to what the house was originally listed for. And this just shows, what this shows is, like I said, it's a Realtor scorecard. This shows how good of a job the listing agent did, how well the listing agent knew the market, and how well he or she did conveying this information to the owner and educating the owner, and then assuring that the house hit the market properly priced. And particularly in a market like we've been in the last 4 or 5 years where we have declining prices, I can't emphasize enough how important it is to come out at the right price, because when you come out above the right price and then 2-3 months later realize that, well, guess what? Now the new right price is less than it would have been to start with. So you're much better off getting the information to do it right from the start. And that's something that at Moore Realtors we're very proficient at. We have the data. We love real estate market data. We love real estate, and we take this data, we teach our agents, we train our agents, we know how to use this. We teach our sellers, we teach our buyers, we educate people so that you can make smart decisions. And we can see here, in general, real estate agents are not doing that. This is pretty poor. Matter of fact, it's real poor, because the red line here shows what homes are selling for in relation to what they were originally listed for. And basically, although it hit as high as 90, a little over 92%, it's been about 90%. And so that's a pretty significant cut. So that means these homes are coming out overpriced significantly. We can see the yellow line, which is what the homes sell for versus what they're listed for at the time of sale. That's pretty consistently about 96%. Well, so eventually, they are selling for 90% of what they're listed, or 96% of what they're listed for. But if it's 90% of the original list price, you can see that there's a large gap here. So the ones that are selling are having to make price changes along the way. Now this is a long-term look at home prices for this 5-county area. This is a 10-year look at the median list price and sales price. The list price is the blue line. We can see over the 10-year period it's went from somewhere in the 130s up to a peak above, in the 160s, and then down, and we can see it's flattened out here the last year or so, somewhere in the high 130s. The green line, the median sales price, we can see what that's done. It's below it, and we can see it's trended downward quite a bit. We can also see this gap between median list price and median sales price growing quite a bit, and this bothers me. This could be a shift in the market. Perhaps there's more higher priced homes coming out on the market, and it just so happens the lower priced homes are what's selling. And I could do an analysis and tell you if that's true or not, but just off the cuff, I'm going to guess that's not the case. I think what the case is here is these overpriced listings that I was talking about. To dig in a little deeper here, here's the data behind that chart I made, and we can see that the median sales price back in 2002 was $127,500. We can see we finished 2011 with a median sales price of $118,000. So the 2011 home prices were actually below where they were in 2002. In 2012, it shows median sales price $92,000. Well, that's based upon January, basically. And so we can see we had a lot of low-priced homes sell in January, a lot of low sales prices. So we'll see what happens going forward. I mean, this number is going to get bigger. But we can see on the listing side, though, not as much of a radical change on the median list price as we're seeing on the actual sales prices. We see it was 141 in 2010, 134 in 2011, and still 134. So we'll watch it going forward. Now this has just been a quick overview, and it's a little taste of just a few of the resources that we have available at More Realtors and some of the data we have available. I invite you to visit our website at mo-re.com. There we've got a lot of market data. We have reports that are helpful reports for buyers, sellers. We have lots of information there. In the upper right hand corner here you see a little snapshot of our newsletter. I invite you to sign up for our free monthly newsletter. This comes out electronically via email once a month. This is all fresh stuff. This is all information and data we compile and collect. This is not some canned package deal that's going to be useless to you. The newsletter has news and information like this market update. It has market information, lots of good things in there. You can subscribe to that from our website at mo-re.com, or you can subscribe to it from St Louis RealTorS.com. There's a little form off to the right. Down there you see me, my partner John Williams, and our partner Nick Seapack. We're the leadership team at More Realtors, and us and our a group of very experienced professional agents are here and ready to help you, whether you're wanting to buy or sell, or if you're an investor. I invite you to contact us. Over here you can see you can catch this market video update that I do weekly. You can get it off our YouTube channel, youtube.com/More Realtors. You can get it from our Facebook page, facebook.com/More Realtors, and go to video market updates, or you can go to iTunes, go to the iTunes store, search St. Louis Real Estate Market Update, look for the arch and the logo here you see, and you can click on that and subscribe to it. This page here got a couple QR codes. The left one there, if you go there, it's a web page that has lots of resources for buyers and sellers, many of the things I've talked about here. The one on the right, that's another way to get our free St. Louis real estate forecast for 2012. This is good stuff. I'm telling you what's in the, I don't profess to be an expert. I just profess to be somebody that has been in this market or this business for 33 years, that studies the real estate market, takes in all the data I can and tries to gain an understanding. Uh, and to brag a little bit, it must be pretty good stuff that we produce. Lawrence Yun, who is the chief economist for the National Association of Realtors, he's the guy that's quoted the most regarding existing home statistics. He was recently in town to give a presentation on the outlook for the real estate market to area realtors, and in his presentation he actually cited data and a slide from my forecast there. So for whatever it's worth, I think that shows we got some real stuff. So here's a legal disclaimer. You can read that at your leisure. It's exciting stuff. I'm going to go back to the QR codes and leave this up here so you can scan them. Hopefully you've got a smartphone or an iPad or something with a QR code scanner. If not, join the 21st century and get one. Hey, until next week, I hope you have a great week, and God bless you.